Hi there folks, just got back from a 2-week vacation spent with the family here in the UK. Spent a week down on the southern coast of England, then we took a flight up to Scotland to see what that's all about as well. Had a fantastic time with the family. Normally we go over to Asia. I've got a villa out there in Thailand and Philippine connections. But this year we decided to stay put, of course, because of the pandemic and so forth. Now, over the 2 weeks, on 3 separate occasions, I was approached by people saying, are you the Andrew Lockwood from the YouTube channel? Are you the Forex trader? I was actually quite chuffed to see I'm getting myself out and about. Now, 2 of the 3 that came up to me basically inspired this week's video. They asked me, how long does it take to become a consistently profitable trader? How long will it take them before they can ditch their job and become a full-time trader? Now, I get asked this question all the time by the aspiring trader, people that come into our trading room. How long will it take me to become proficient so I can give up the day job? And that's what I want to talk about in this video. I think it's fair to say that when I give the answer, many are quite surprised. And it surprises me that they're surprised. I always ask them back, well, if you want to become, say, a solicitor or surveyor or an accountant, how long is it going to take you? If you want to become a doctor, if you want to become a vet, you want to become a bricklayer, you want to become a plasterer, how long does it take for you to become proficient at your job? Normally the answer, 2 years, 3 years, or what have you. Obviously longer if you go into medicine and so forth. So when I tell them the truth about trading, they get surprised. And I think to myself, well, hang on. Why do you think you can come into the trading markets, the financial markets, and think you can fast track it and do it in a couple of weeks? It's not going to happen. So that's basically what I want to talk about today. Think of it this way. If you become a trader and within the first year, you make a profit, doesn't matter if it's a $100 profit, $500 profit, if you can make a profit after the first year of trading, you are better than 95% of the people that come into the markets. Interesting thought, isn't it? Now, this video, I'm going to be totally realistic. I've got nothing to sell you. I'm going to be realistic. It might shock some of you, but there you go. I'm not here to impress. I'm here to tell you the facts as I see them. Okay, let's have a look. Okay, so these are the 5 stages that I think everyone goes through or should go through before they should even consider giving up their day job. Now, before I get into this, I did ask my daughter to put together this Bitmoji for me, basically to include maybe a picture of me. She's come up with this, and I'm not quite sure which of these is actually me. You got the guy there with no hair, you got the guy there with glasses. Anyway, there you go. Thank you to her for that. Right, okay, so these are the 5 stages. First off, you've got the excitement phase. This is basically when you're in your job, you hate your job, you don't like your boss, you want to give up your job and do something different. Most people that come into Forex are not happy in their current environment. They want to change their work-life balance and so forth. Or they've been watching YouTube and they've seen all these success stories, these young guns making $12,000, $15,000, $20,000 a day, driving the flash cars in the penthouses, and they think, hey, that's a bit of me, that. I like a bit of that. So I will start now to become a trader. What happens is they start to dabble, they start trading with small accounts in the market, chucking in $100 or $500. $500 doesn't matter if you lose it, I'm learning. Well, you're not actually learning, you're just gambling, but there you go, you're chucking in these small funds into the account, thinking that you're going to give yourself a chance at being a trader. Or you may then think, well, hang on, I'm losing a bit of money here, maybe I should start to follow some signals. That means I don't actually do any work. I just get a ping on my phone, take a trade, and I can start thinking about giving up my day job. And what ends up is you end up blowing up multiple accounts. $500 here, $100 there. Brokers' bread and butter. They love people coming into the markets with absolutely no idea what's going on, just blowing up these small accounts. Now, I call this excitement phase the unconscious incompetence. What's unconscious incompetence, you ask? Well, it basically means you don't know what you don't know. So basically there's a lot going on out there and you don't know what you don't know. You've had a go, but you think something is going on. Now, if you are inclined to continue on past this phase, many will give up at this phase. They think it's not for them. But if you're so desired and you're so driven and you want to carry on, then you might move into this phase. This is the conscious incompetence. So now you know that you're incompetent. now that you know you need education, so that's exactly what you do. You seek out some education. You've got to learn the rules. You've got to know the ropes of this trade. You may look at technical analysis. You may start studying fundamental analysis. You've seen all these charts and you think, what's it all about? I need to now think about it much more seriously. Then you might look at simple price action. You know what price action is? It's basically what's happening to price. And we see that on the regular candlestick charts and so forth, bar charts, line charts, basic price action patterns and so forth. You might look at risk management. Well, you should be looking at risk management, I should say. So you know now you should be controlling risk. You know you should be controlling risk so you don't actually have these blow-ups in the accounts that you had in the unconscious, incompetent phase of all this. So you start studying risk management. You might be looking then at strategy development. You're not going to make money in the markets unless you've got a strategy with an edge. It's all about having an edge. There's plenty of strategies out there. We teach lots of strategies, but it's not all about the strategy. But you need one, so you start to develop a strategy, okay? And then you have to understand, you start to learn about the metrics of evaluating your strategy. A strategy is not just based on profit and loss. There's lots of metrics going on in there: the expectancy, profit factors, drawdowns, and so forth. This is all the information that you got to spend time studying. I reckon that should take 3 to 6 months. I think really it's at the upper end of that. Maybe that's going to take you 6 months just to get familiar with all the workings of what it takes to become a day trader in the markets. So that's the conscious incompetence phase. Now, once you're past that and you think you know a little bit about the mechanics, the working parts of trading, you move into this phase, the back testing phase. Now, this is a really important phase of the whole process of becoming a trader. I talk about it all the time. I'm sure I've bored many of you here on the channel talking about backtesting because it is so important. This is where you basically run your strategy through historical data to see how the strategy works. Not only if it's profitable, but get to know the workings of it, the win-loss ratio, the consecutive drawdowns, consecutive losing trades, the consecutive winning trades, as I said, profit factors, expectancy, and so forth. And then you learn how to do all the journaling as well, how to monitor and to journal all your trades so you can keep a track of how that strategy is going in your backtesting phase as well. And of course, the evaluation basically evaluating how successful and how the strategy works. So it's a very important phase. I put it down here as 3 to 6 months. Quite frankly, the longer you spend in backtesting, if you're serious about this as a career, the better. And if you've been backtesting your strategy after 2 or 3 months and it really isn't giving you the edge or the confidence to go forward, then you can move on to something else. But do beware of the cycle of doom. It's basically my catchphrase. I talk about it all the time. The cycle of doom is basically when you keep changing things, tweaking things, and so forth. The cycle of doom exists in the backtesting phase as well as forward testing or live trading as well. So beware of the cycle of doom. If you are going to be testing a strategy in the backtest, make sure you give it some time. You may have just hit some data that's going to be negative for that particular strategy. So backtesting phase, certainly 6 months. The longer you spend backtesting, getting confident, the better. Remember, you're thinking about ditching your day job, as this character is doing here. You're thinking about changing that. You're putting your family's finances, security at risk. The longer you spend doing that, the better. Once you've finished that phase, which as I say takes 6 months, you may be going into demo trading. Demo trading is basically when you're trading pretend money for the sake of it. Now, a lot of the educators out there will say, don't demo trade, trade small amounts because then you have the emotions that is attached with real trading. And I think they're wrong. I think demo trading is a very important part of this process. And if you haven't got the mentality to treat it seriously in the demo trading phase, then the chances are you haven't got the mentality to become a trader full time. You have to respect this part of the process. It's a very important part of the process. If you're one of these ones that needs $10 on the line or $50 on the line on a trade to keep you motivated, then that motivation is basically detrimental to your long-term goal. So this demo phase, again, 3 to 6 months, just there alone. Remember, you're thinking about putting your family security on the line and ditching your day job to become a full-time trader. So take that process very, very seriously. Once you've done that, then possibly you can move into live trading of your own funds. Now, what I've done here, I put down here, small accounts, limited leverage. This is very important. Remember, we've opted for demo as opposed to real money at this stage. When you do hit the markets with your own money, make sure that you're trading a small account. Now, I don't know what small is for some of you, but say you're trading, say, 10, 20% of what you're able to put into the markets, you should be starting off with, I think, as you hit the markets, because those other educators are right, the emotions are different, but make sure that you are not going to blow yourself out of the water the moment you start trading live money. So start with a limited amount of what you are going to apply to trading and use low leverage. A lot of people come into Forex because of leverage, because it gives them the ability to magnify their profits. But leverage is, as we always say, a double-edged sword. Excessive leverage, I think, will increase your emotions, and I personally believe it will be the fast way to the poorhouse for most aspiring traders using excessive leverage. So start off trading with a limited account of your main account before you actually tell the boss to go and jump in the lake. Or indeed, you may be going down the prop firm challenge route as well at this stage. This is where you start to take all your education or your back testing or your demo trading, and you now start to pay these prop firms to take their challenges. Now, I'm not going to go too much into prop firms on this video. We've covered that in, I think, videos a couple of months ago. You can go and check it out if you wish. It's basically where you pay a prop firm a certain amount of money to take a challenge. If you pass the challenge, they will fund a trading account for you, and they will give you a proportion of those profits if indeed you hit those targets that they set out for you. It's a great way to be trading if you have a limited account. But don't even think about paying these prop firms for those challenges until you've done all that as well. Remember here, we're thinking about giving up the day job. I'm not talking about just a bit of a passive pocket money. This is giving up your day job. So all this, 3 months there, 6 months, all this, I think realistically, to be fair, 2 years. I think from nothing, from zero to giving up your day job is minimum of 2 years work. 2 years work that you can do alongside your day job as well. Doesn't matter if you're shift working or evening work, you can do this in your own time. You don't need to go off to university to do this. You can do this with simple education. Of course, we provide education as well as others do as well. But you can do this in your own time, depending on how much time you can give to it. I say 2 years is about right. You remember, trading is as much about psychology as much about everything else as well. If you haven't mastered all these or covered all these different phases, your psychology will be all over the place, I guarantee you. And above all, I think you need to have realistic expectations. I often talk about this. It really, really is important. Those that are coming into the market with $500, wanting to give up their day job just with a $500 trading account, chances are, folks, it's not going to happen. Trading is all about grinding out profits over a period of time. 4 to 5% a month is a staggering return. That's about 80% a year if you compound that up. But 4 to 5% a month is very achievable if you're disciplined and you stay focused. 4 to 5% a month, you might not have the funds to make it. There's other routes you can do, as I say, the prop firm challenge as well. If you're coming in to make 10, 20, 30% a month, if you need to make 30% a month, the chances are you will end up blowing up. And I certainly wouldn't want any of my family giving up their day jobs with that type of aspiration to make those big gains. Okay, so I hope you found that useful and insightful. These are just my opinions. Yeah, you may hear different elsewhere, and that's absolutely fine. But I'm here to tell you what I think is the cold hard hard reality. And if you like the video, of course, always give me a thumbs up, give me a thumbs down. If you think it's a load of old nonsense, that's fine. Don't forget to subscribe to the channel, and of course that bell notification, well, you know what that does, it notifies you when we release the next video, which, as you know now, is a couple of times a week. Don't forget to follow us on all the socials. You can do that by clicking the links above. As you know, we are streaming live around the clock. We stream up to 6 times a day now, 5 days a week, inside our trading room. We discuss all this and much, much more, looking at trading opportunities throughout the trading day as well, discussing strategies. If you want to take part in that, you can do so. There is a 7-day free trial. You can take it in, see what you think. If you don't like it, you don't have to stay, you don't have to pay. If that's not your thing, that is not a problem. I'll see you next week. Have a good week.